What's going on, guys? My name is Richard, and welcome back to another weekly watchlist video sponsored by Marketsmith. As usual, we'll go through both the fundamentals and Marketsmith of all the stocks on my focus list, as well as talk about the specific technical setup that I would use to trade these stocks. And if you enjoyed my analysis, please go ahead and leave a like down below. It really does help me out and my channel, and subscribe for more videos just like this one every single week. And before we get into the analysis, I do want to say that this is the second to last week of the stock picking contest, and here are the awards that I have planned to give out at the end. The Top Performer Award, which will be given to the person who has the most consistent weekly returns with a strong emphasis on participation. So you can't win this if you've only participated for 1 or 2 weeks. You have to show consistent weekly returns. And the prize for this award will be an Amazon gift card and the first choice of 3 trading books. And then we'll also have the Participation Award, which will be given to the person who's participated almost every week and shows consistent performance. And they will also be given one of the 3 trading books as their prize. So make sure you guys enter your picks for this week following the instructions on the screen right now. And let's get into the analysis of my watch list. So starting these off, we've got Adobe, which is a familiar name from previous watch lists. And overall, you can see consistent growth in terms of both earnings and sales. Last quarter earnings were up 34%, sales up 14%, and after-tax margins up 37.9%. And in terms of annual EPS growth, you can see in 2020, it's supposed to grow 24%, and in 2021, a further 14%. The EPS rating is a 9.9, the Group RS is an A-, the SMR rating is an A, accumulation distribution is a B-, and the overall composite rating is a very strong 99. And look at the fund ownership, you can see an increasing trend, and you have a whole bunch of high-quality funds investing into Adobe. And looking at the chart, you can see it's currently in a flat base at this point, and the RS rating is an 86, and the RS line is decreasing along with price. So I want to see it move up towards the pivot, which is 470.61, and I want to see this RS line move up as well. And as for the technicals, I really like this pattern of higher lows within this base, and I like how it's finding support at that 50-day moving average, and currently it's only about 3% from that 50-day, so this definitely could be an entry if you're looking at a position trade. But overall, I'm looking for a break above this downward trend line right here on above average volume, or potentially a green dot entry if it shows that next week. So that's my plan for Adobe. And next up on the list, we've got Advanced Micro Devices. And overall, looking at the earnings and sales, you can see excellent growth here. Last quarter earnings were up 125%, sales up 26%, and after-tax margins up 11.2%. And in terms of annual EPS, this really hits it out of the park. You can see in 2020, it's supposed to grow 72%, and in 2021, a further 49%, with the revisions up as well. The EPS rating is a 9.9, the Group RS is an A+, the SMR rating is an A, accumulation distribution is a B+, and the overall composite rating is a 99. And looking at the fund ownership, you can see an increasing trend, and you have 3 high-quality funds investing into AMD. And taking a look at the chart, you can see it's moved up with gap ups on volume, really a sign of strength. And overall, this is more of a swing trade setup if it acts well, bouncing off the 10-day moving average and breaks out into new all-time highs. And overall, the RS rating is a very strong 95, and the RS line is consolidating a bit along with the price. And as for the entry setup, I do want to see a break of this downward trend line right here, or a green dot setup early next week, and eventually, as I said, a breakout into new all-time highs above 87.29. So that is AMD, and next up we've got Amazon. And taking a look at the earnings and sales, you can see decent growth, especially in terms of revenue. In last quarter, it was especially strong. Earnings up 97%, sales up 40%, and after-tax margins up 5.9%. And this stock is definitely riding the tailwinds of the e-commerce really boom, with a lot of those stocks doing very, very well, especially in terms of fundamentals. Looking at the annual EPS, you can see in 2020, it's supposed to grow 32%, and in 2021, a further 42%, which is quite substantial for a company this size. And the EPS rating is a 93, the Group RS is an A+, the SMR rating is an A, the accumulation distribution is an A-, and the overall composite rating is a 99. And looking at the fund ownership, you can see an increasing trend over the past 2 years, and you have a whole bunch of high-quality funds investing into this stock. And like Adobe, you can see it's currently in a flat base with a pivot of 3,344.29, and overall you can see that's forming higher lows here, and you can see the RS rating is a strong 92, and the RS line is basing along with the price. And as for the entry setup, I want to see a break of this downward trend line right here, or potentially a green dot early next week. And I really like these bars right here where we've got strong reversals when it nears the bottom of this base. So that is Amazon. And next up on the list, we've got CELH, or Celsius Holdings. And this definitely is a higher risk pick, and there are a mix on this list of position trades, swing trades, so make sure you know your own kind of risk tolerance and what you can handle, because these can be very risky, and you have to make sure you manage that risk using stop losses, position sizing, all those different methods. But anyway, looking at the earnings and sales, you can see decent growth here, especially last quarter. Earnings were up 167%, sales up 86%, and after-tax margins up 5.2%. And looking at the annual EPS, you can see in 2020, it's supposed to take a hit, down 50%, but it's supposed to bounce back in 2021, up 125%, and the revisions are up as well. The EPS rating is a 38, the group RS is a C+, the SMA rating is an A, the accumulation distribution is an A+, and the overall composite rating is a 92. And looking at the fund ownership, you can see an increasing trend over the past 2 years, but you don't have any high-quality funds investing in this company, which is pretty normal because it's made a huge move recently and definitely is a lower price stock. And overall, looking at the chart, you can see the RS rating is a very strong 99, and the RS line is right near, or actually is at, all-time highs. And as for the technical setup, this is a potential high tide flag, with it increasing over 100% from a proper buy point and now pulling back less than 20%. But keep in mind, there have been only about 5-6 trading days in here, so it definitely could base a little bit more and form some higher lows before eventually breaking out past the all-time high at 22.96. So keep that in mind and make sure you know that this is higher risk. I want to be very clear on that. This trade is not for everyone. But that is my plan for CELH. And moving on, we've got Etsy. And this is another stock kind of riding that e-commerce tailwind. And looking at the earnings and sales, you can see decent growth here. Last quarter earnings were up 436%, sales up 137%, and after-tax margins up 22.5%. In terms of annual EPS, you can see excellent growth as expected. In 2020, up 154%, and in 2021, a further 13% on top of that. And this definitely is a breakout year in terms of annual EPS. The overall EPS rating is a 43, the group RS an A+, the SMA rating is an A, accumulation distribution is an A-, and the overall composite rating is a 98. And look at the fund ownership numbers, you can see an increasing trend, and you have 4 high-quality funds investing into Etsy. And as for the chart, you can see the RS line is right near all-time highs, the overall rating is a very strong 97, and looking at the technical setup that I plan to use, you can see it pulled back to the 10 EMA, so I want to see a move up from here, a green dot entry, and eventually break out into new all-time highs above 141.41. So that is Etsy, and next up we've got another kind of e-commerce stock, Fiverr. And looking at the earnings and sales, you can see decent growth in terms of revenue, and last quarter it really got its act together, and earnings were up 163%, sales up 82%, and after-tax margins up 7.7%. In terms of annual EPS, you can see in 2020 it's not available, but it's supposed to grow 228% in 2021. And these type of numbers really get my attention, especially when their annual EPS estimates are huge. And the EPS rating is a 68, the group RS an A+, the SMA rating is a C, accumulation distribution is an A+, and the overall composite rating is a 99. And looking at the fund ownership, you can see a nice increasing trend and a big jump the past quarter. And overall, you also have 2 high-quality funds investing into this company. And taking a look at the chart, you can see it gapped up on earnings, but then fell and filled that gap, which is a negative for me. I would have liked it to kind of base out, holding the low of the breakout day, but overall, it's still above that 21 EMA, so nothing is broken at this time. And overall, the RS rating is a 99, and the RS line is basing along with the price. And as for the technical entry, I want to see a bounce off the 10-day EMA, or potentially a break of this downward trend line right here, but obviously this is not that many days here, so this isn't really a real downward trend line. So overall, I want to see a green dot, and that would really be my signal to get into the stock. And eventually, I do want to see a breakout into new all-time highs above 126.33. So that is Fiverr, and next up on the list, we've got Lumber Liquidators. And overall, LL isn't your kind of classic can slim growth stock, but the price action has been extremely strong, and you can see a ton of growth down here in terms of earnings and sales. And last quarter, earnings were up 233%, sales were down 20%, but after-tax margins were up 1.3%. And in terms of annual EPS, you can see it's supposed to grow 59% in 2020, but it is supposed to drop back down in 2021, 3%. The EPS rating is a 78, the group RS is an A-, the SMA rating is a D, accumulation distribution is an A, and the overall composite rating is a 94. And looking at the fund ownership, you can see it's pretty much flat over the past 2 years, which I don't like, and you do not have any high quality funds investing into this stock. And looking at the chart, you can see the RS rating is a very strong 98. The RS line is basing along with price, and it's forming a potential high tight flag pattern like CELH. And as for the entry setup, I want to see a breakout above this downward trend line right here, and eventually a breakout into new all-time highs above 23.45. And looking at the price action, you can see it's grown very quickly in a short amount of time, forming this high tight flag pattern. And I like this reversal on this day actually because it shows that there is power behind this move, because even though it did drop substantially that day, it recovered almost to the open of that day and stayed above this 21 EMA. So once again, this is a higher risk entry, so please be careful and manage your risk accordingly. So that is LL, and next up we've got LRN, or K through 12 Inc. And looking at the earnings and sales, you can see decent growth here. Last quarter earnings were up 288%, sales up 5%, and after-tax margins up 4.7%. And in terms of annual EPS, you can see in 2021 it's supposed to grow 32% and a further 31% in 2022. The EPS rating is a 9-1, the group RS an A-, the SMR rating is a C, accumulation distribution is a B+, and the overall composite rating is a 94. And it's really not surprising that the stock is doing well, especially given the current situation. I'm sure that's understandable. And looking at the fund ownership, you can see it's pretty much flat over the past 2 years, and you do not have any high quality funds investing into this stock. And looking at the chart, you can see the RS line is basing along with the price, and overall the RS rating is a 97. And as for the technicals, I want to see a break through this downward trend line right here on above average volume, or it could form a green dot very shortly. And I like this bar right here because it shook out all these stops that were below these lows during this consolidation. And I also like that it's right above this long-term base below this green line. So that was LRN, and next up we've got OLLI's bargain outlet. And looking at the earnings and sales, you can see it's not quite substantial, but you do have a boost in 2021 of annual EPS expected up 44% and a further 4% in 2022. The EPS rating is a 94, the group RS is an A+, the SMR rating is an A, accumulation distribution is an A-, and the overall composite rating is a 98. And looking at the fund ownership, you can see it's slightly increased over the past 2 years, and you do have 3 high-quality funds investing into this stock. And looking at the chart, you can see it's not quite in a flat base just yet, and overall the RS rating is a 92, and the RS line is basing along with the price. And looking at the technicals, the setup that I want to see is a breakout above this downward trend line right here, or a breakout above the short-term resistance at 105.57, and once again, eventually a breakout into new all-time highs above 110.17. So that's OLLI, and next up we've got pins. And this is our previous stock of the week, so go ahead and check that video out, which will be linked above if you want more information about the stock. And in that video, I also compare it to Facebook and Fastly right after their earnings breakouts. And you can see kind of how these breakouts are expected to kind of follow through and eventually move up once again. So check that out if you're interested. And overall, looking at the earnings and sales, you can see decent growth a few quarters ago, but so far, not the greatest growth the past 2 quarters. And in terms of annual EPS, you can see in 2020, it's not supposed to be profitable, but it is supposed to be profitable in 2021. The EPS rating is a 13, the group RS is an A+, the SMR rating is a C, accumulation distribution is an A-, and the overall composite rating is a 78. Looking at the fund ownership, you can see an increasing trend over the past 2 years and a big jump this past quarter, and you do have 2 high-quality funds investing into Pinterest. And looking at the chart, you can see it gapped up on volume after its earnings report, and it's often the reaction to the earnings that is more important than the numbers itself. And overall, the RS rating is a 93, and the RS line is basing along with the price as it pulls back right below its all-time high. And looking at the technicals, I want to see a breakout through this downward trend line right here, and eventually a green line breakout. And this green line is basically the IPO high that's set all the way back in 2019. So that is pins, and next up we've got SAM. And looking at the earnings and sales, you can see excellent growth this past quarter. Earnings were up 116%, sales up 42%, and after-tax margins up 12.7%. And there's a lot of annual EPS growth expected. In 2020, it's supposed to grow 45%, and in 2021, a further 32%, with the revisions up as well. The EPS rating is a 78, the group RS is an A, SMR rating is an A, accumulation distribution is also an A, and the overall composite rating is a 99. And looking at the fund ownership, you can see a slight increase over the past 2 years, and you do have 2 high-quality funds investing into this company. And taking a look at the chart, this is also a gap up after its earnings report, and it's holding up well, and overall the RS rating is a 96, and the RS line is basing along with the price. And looking at the technicals, the setup that I want to use is a break of this downward trend line right here, or just a breakout into new all-time highs above 871.64. So that is SAM, and next up we've got TSM, which is also on my previous watch list. And looking at the earnings and sales, you can see excellent growth here. Last quarter earnings were up 93%, sales up 36%, and after-tax margins up 38.9%. And looking at the annual EPS numbers, you can see in 2020 it's supposed to grow 44%, and in 2021 a further 6%, with the revisions up as well. The EPS rating is a 93, the Group RS is a B+, the SMA rating is an A, accumulation distribution is an A-, and the overall composite rating is a 97. And looking at the fund ownership, you can see a steady increase over the past 2 years. You do have Fidelity Contra Fund investing into TSM. And looking at the chart, you can see it's basing currently after a big gap up on earnings, and overall the RH rating is a very strong 93. And as for the entry setup, I want to see a breakout above the shelf right here through this downward trend line, and eventually a breakout into new all-time highs above 84. So that was TSM, and next up we've got TTWO, or Take-Two Interactive Software. And looking at the earnings and sales, you can see excellent growth the past 3 quarters. Last quarter earnings were up 88%, sales up 54%, and after-tax margins up 10.6%. And looking at the annual EPS numbers, you can see it's supposed to grow 35% in 2021 and 17% in 2022. The EPS rating is a 95, the Group RS is an A+, the SMA rating is an A, accumulation distribution is a B+, and the overall composite rating is a 98. And looking at the fund ownership, you can see an increasing trend over the last 2 years. And you do have 4 high-quality funds investing into this company. And looking at the chart, you can see it's moved up well from the stage 2 cup and is pulling back to the 10-day and right above the 21 EMA. And as for the entry setup, I want to see a break of this downward trend line right here, and eventually a green dot, and then a breakout into new all-time highs above 180.61. So that's TTWO, and lastly we've got UCTT, which is also in the semiconductor space. And overall, looking at the earnings and sales, you can see excellent growth here. You can see acceleration in earnings and sales and margins the past 3 quarters. And last quarter earnings were up 178%, sales up 30%, and after-tax margins up 8.9%. In terms of annual EPS, you can see it's supposed to grow 115% in 2020 and a further 6% in 2021. The EPS rating is a 98, the Group RS is an A-, the SMA rating is a B, accumulation distribution is a B-, and the overall composite rating is a 99. And looking at the fund ownership, you can see an increasing trend, but you do not have any high-quality funds investing into this company. And overall, you can see it had a gap up after this breakout from the cup and handle, but it has pulled back all the way to the low of that breakout, but it has held, and it looks like it could be moving up from this downward trend line right here. And as for the technical setup, you could start buying if it falls through on this downward trend line break, or potentially a green dot entry early next week. So that is my plan for UCTT, and overall my top 3 setups for this week are TSM, Amazon, and also LRN. So I hope you guys enjoyed my analysis, and if you did, please go ahead and leave a like down below and subscribe if you're new to the channel, and make sure you guys leave down below your picks for the stock picking contest. This is, as I said, the second to last week, so make sure you get those in for education and a bit of fun. But that's it for me. Thank you guys so much for watching, and I'll see you guys in future videos.